morning, and welcome to episode 262 of Getting Rich. I'm your host, Rich Checkin, president of Asset Strategies International, and today is Wednesday, February 4th, 2026. Russia has stepped up its attacks on both Kiev and national energy infrastructure in Ukraine, despite an agreement for a fragile one-week truce. U.S., Russia, and Ukraine are scheduled to meet for trilateral talks in Abu Dhabi with the goal of peace in mind. An Iranian drone targeting the USS Abraham Lincoln was shot down here recently, and despite that, the U.S. and Iran are still scheduled to meet in Turkey to discuss nuclear talks. Prior to those talks, U.S. negotiator Steve Witkoff is in Israel meeting with Benjamin Netanyahu to get their game plan together for those talks in Turkey. Bill and Hillary Clinton have agreed to be deposed in the Jeffrey Epstein files case, and U.S. manufacturing employment has dropped to its lowest levels since the COVID pandemic. But the big news over the past week was the pullback in gold and silver last Friday and this past Monday, and we'll get to that in a second. But first, let's take a look at the numbers over the past week. Gold is down 4.1%, trading at $5,050.60 an ounce. It was $52.6450 last week. Silver's the big loser this past week, down 19.3%, trading at $90.45. It was $112.15 last week. Platinum is down 12.7% to $2,309 an ounce. It was $26.46 an ounce last week. And palladium's down 6.6%, trading at $18.50 an ounce. It was $1,980 an ounce last week, with silver underperforming gold this past week. It's going to take more ounces of silver to buy that ounce of gold. Your gold-silver ratio has ticked up to 55.84. It was 46.94 last week. And the dollar still very weak and in a weakening trend, but showed a little life over the past week, trading at 97.54 on the index against its major trading currencies. It was 96.27 last week. So as I mentioned, the big news was the pullback in gold and silver. Started Friday, continued on Monday, and we've kind of hit a little bit of a plateau and a bounce back on Tuesday, yesterday. The fall on Friday was about 10% in gold and about 35% in silver. And of course, you had a ton of pundits coming out telling us why it happened, and a bunch of others saying, see, I told you so, you should have never bought those metals in the first place. I have problems with both of those. The first thing is, everybody's coming out and saying that this was a reaction to the naming of Kevin Warsh as the potential replacement for Jerome Powell as Federal Reserve Chairman. Folks, one vote on the Federal Open Market Committee is not enough to move gold anywhere or silver anywhere, let alone a 10% and 35% drop respectively. I'm sorry, the markets were looking for a reason for gold and silver to correct. Investors were looking for a reason to take some profits because gold and silver were relentlessly going higher with no pause, no time to take a breath. They needed to pull back and to consolidate, and this just happened to be the excuse the markets used to let that happen. In terms of the folks coming back and saying, see, I told you so, you should never bought this in the first place, these are the same folks, honestly, that have been dead wrong about gold and silver for the past 4 or 5 years. Why on earth would I believe them now when they're saying, see, I'm right, gold and silver are pulling back? Folks, fundamentally, nothing has changed at all. Nothing. There's not a single indicator suggests that gold and silver should be falling and that this is the end of the bull market. So what is this? This is a bull market dip. Nothing more. It is an opportunity to be embraced. If you need more gold or more silver in your portfolio, here's a great chance to pick them up on the cheap. If you have enough, ride it out. It is nothing but a short-term dip. Act accordingly. As always, we like you to go ahead and subscribe to our YouTube channel. Follow us, send us your comments and questions so we can address them on the air. If you have some thoughts on this pullback, what you think caused it or what this means going forward, I'm happy to take them, listen to them, share them on the air, and give you my thoughts as well. Again, you know where I stand on this. Would love you to follow us on social media, take our twice weekly, always something interesting alerts, and our once monthly information line newsletter. That comes out tomorrow, by the way, and you can sign up for all that stuff in the description paragraph below this YouTube video. But in the end, don't ever forget, getting rich starts with keeping what's yours.